private limited company is one of the best form of starting a business. However, there are certain compliances which need to be followed as per the Companies Act, the Income Tax Act, and to have a good standing with the government. The compliances immediately after the company is formed include appointment of the auditor of the company within 30 days of incorporation. This auditor is a chartered accountant who will audit the accounts of your company at the end of the year. The second is opening the bank account of your company at the earliest. The shareholders need to deposit the share capital subscribed by them at the time of incorporation into the bank account. The company has to issue share certificates to the shareholders within 2 months from the date of incorporation. The quarterly compliances include holding board meetings in every quarter. Board meetings are essentially meetings of the directors of the company where they discuss plans, strategies, and future course of action of the company. The discussions of the meetings are documented in the form of minutes of the meetings, which are filed with the ministry at the end of the year. There are 5 important annual compliances. 1. Disclosure of directors' interest. 2. Statutory audit and tax audit. 3. Filing the income tax return of the company. 4th, holding the annual general meeting. And 5th, filing the annual returns with the Ministry of Corporate Affairs. Now let's understand these. First, disclosure of directors' interest. Every director has to inform to the company in a specified format as to whether they are the directors or shareholders in any other company. Second, statutory audit and tax audit. Statutory audit is mandated by the Companies Act. It is a formal review of accounts which is conducted by a chartered accountant who is appointed as the auditor for the company. He provides his opinions and comments in his report and provides the statutory audit report. Tax audit. Tax audit is mandated by the Income Tax Act for companies whose turnover is more than rupees 1 crore. Third, it is important for every company to file its income tax return soon after its accounts are audited based on its financial statements. Fourth, holding the AGM. The annual general meeting is a meeting of the shareholders of the company which has to be done within 6 months from the end of the financial year. In an AGM, the shareholders approve and discuss the accounts of the company and also appoint the auditor for the next financial year. Fifth, filing of annual returns and financial statements. The annual return of the company has to be prepared and filed in Form MGT7. The financial statements of the company have to be filed in Form AOC4 at the end of the financial year. It is important to adhere to these compliances on a timely basis in order to avoid late filing fees, penalties, and to maintain a good standing of the company. You should also maintain your accounts on a regular basis and file your GST and TDS returns on a timely basis. Venture Easy can help you with all these mandatory compliances and help you manage your taxes.